All right. Welcome to Be the Market Expert. And I got something special for you guys. I don't know if it's special, but it's interesting. Um, I have this listing, and the listing's for $1,000. There is a $1,000 condo in Florida right now, two bedroom, two bath, almost 1,400 square feet. Let's round up. Let's round it up to 1,400 square feet. Let's look at some photos real quick. All right, so it's a ground level. So I think it's the C unit right here. So you are on the bottom level. So yeah, you're going to have some neighbors above you. A little bit of an area you're walking through. Yes, this looks like Florida to me. You even got the slip cover chairs here that were made that way. They didn't even like put them on there. Like they actually bought slip cover chairs, glass table. You got your crystal chandelier, your mirrored wall. You're going through. Okay. We're looking at it, some popcorn ceiling, all time. Looks like a Florida condo to me. All right. Like if I've ever seen one, this is it. Hasn't been updated since the 90s. I'm not mad at it. But right, like we're going through wallpaper. Well, there's some green walls looking at it. All right. Okay. More wallpaper. Here's your yard. All right. So I'm looking at this thing. You know what? All in all, not bad. But here's the deal. Why is it $1,000? So it is owned by a trust. All right. So it's owned by a trust. It looks like you get like a little area. You get a pool. You're on the golf course. And that's actually the thing. You're on the golf course. All right. So this is owned by a trust. They are selling this unit. It truly is only $1,000. All right. This is a $1,000 property. It's been on the market for 47 days, though. And the reason behind that is because there is a one-time buy-in fee to this country club. It's called Hunters Run Country Club that you must be a member of, and it's a $128,000 buy-in. So yes, you're gonna have to do some minor updates to this home. You are going to have to go through and spend $1,000 for the property, but you must be a member. So your one-time buy-in, $128,000, and then there is an annual membership that you must do as well. $20,700. Let's call it 21,000. Let's round up between friends again. So you get a $1,000 condo, two bedroom, two bath, 1,400 square feet. You have to pay into your $128,000 country club fee that is mandatory. Yeah. And then $21,000 annual membership to be a part of this country club. And guys, look, when we're talking about this is what I find super interesting. We understand that nationwide they're running into issues with selling condos, right? Like this isn't a Colorado thing. This isn't even necessarily a Florida thing. But yeah, absolutely. When you look at something like this and you are having to pay a $21,000 reoccurring fee to be a part of this home after you've paid $128,000 to join the club, like there's no wonder why properties like this are sitting, right? Like we understand this. So wanted to bring this to you guys. This is kind of fun. If I was looking to, do something on social media with this, I'd probably actually do like a video on my phone. I'd probably do a screen record of this property. And let me just throw it out there for you guys if you guys do want to run with this. What I would do if I wanted to have some fun is I would take this, I would go through it, I screen record me scrolling through the photos, and I talk about how this property could be yours for $1,000, and then I hit them with the rest of the information. And if you guys want the rest of the information, there it is. It's on a different website, it's homes.com. That's where I found this property today. And guys, throw this on social media, have some fun with it. I think that you guys would actually get some people's attention. Let's fast forward though. Where are you guys living right now? You guys are living in the greatest wealth transfer that our society has ever seen. Congratulations, you guys are all there. Um, and when we're looking at this, guys, check this out. It says baby boomers own half of the nation's $140 trillion in wealth. $140 trillion. We actually had this conversation with the top producers on Friday. And the reason behind this is because of this, guys. Like, as we're going through and we're talking about what is going to happen in our society, what we're seeing is that one demographic of people, the people born between 1946 and 1964, hold $78 trillion in assets. And you guys can see this, right? We see equities at a total of 19 trillion, real estate 18.9. Let's round it up to 19 trillion. Other assets for 14 million. I don't know if that's like Pokemon cards and Jordans, right? Like, I don't know what that looks like, but okay, cool. They have $16 trillion in pensions. Cool. Private businesses, 7.4, and just durable assets at $3 trillion. What I find interesting though, like when we talk about this, we talk about this $18.9 trillion. So $18.9 trillion in real estate. So let's fast forward. Let's go over here. It says an $84 trillion wealth shift is underway, and you may soon inherit a piece of it. And here's what experts say. So again, like as we're looking at this, I think we're going to see numerous different things that are going to happen inside of our real estate ecosystem over the next couple of years. And I think that this is the thing. Let's talk about mindset for a hot second. Now, not that this is the call where we talk about this, but one of the things that we understand is that most people overestimate what they can do in 1 year and underestimate what they can do in 5. Very real, especially in our society, in our world as real estate agents, because we know that most real estate agents are gone within 3 years, 87%, right? Like that's just a statistic that's out there. It's like any other small business. 87% of real estate agents will turn off the lights and close down their shop within 3 years. And yet, when I look at stuff like this, guys, this is exciting. This is exciting because what this is saying is that there's going to be a lot of opportunity here that's going to be coming up over the next couple of years. And it's going to be our job to be in emotional proximity to people when they're thinking about transacting business. And here's the deal. We're having conversations with the top producers last Friday, and they're seeing a couple different things. And I want to share that with you guys, right? And they're seeing some stuff where we have kids. I say kids, I'm going to use that term loosely. They're going through and they are buying real estate and their parents are moving in with them. And so now there's an asset that needs to be sold. And so that's going to be one of these things, right? These parents, these aging parents might not want to move into assisted living. Maybe they want to come home and live with their children. And so that's going to be a home that's going to be up for sale. And we also could be seeing things where, okay, the parent does want to move into assisted living. Maybe they don't necessarily want to, but they understand that they have to. And it's just more feasible that way. So then they have a home to sell and then they move into assisted living. We are also seeing that the parents actually might go into the assisted living because it actually makes more sense. The kids are actually taking over their property and they're selling theirs. And so when we think about all those different ways that this stuff could happen, this is part of that wealth transfer. And because we're real estate agents and we deal in selling real estate, like these are one of the things that we need to keep top of mind as we're going through, because the relationships that we're in might not necessarily come from the houses that our people are currently in right now, but they could be inheriting homes. They could be trading homes. They could be doing a lot of different things that are going to put you in a position to help them with a decision that needs to be made for the betterment of their parents. So what relationships are we in? How are we going through? And here's the things that I'd be thinking about, guys. Like, do you have people in your ecosystem right now that understand how to move a family in the grand piano? Or all of the crystal chinaware? Right. Like, here's the things. Like, think about the mindset of this aging population that is going to be transferring into a different stage of life. And do you have resources available to make them feel comfortable and to make sure that you're positioning yourself as the real estate economist of choice that has the right resources to help them win? And so when we're going through, like it says, how big is this wealth transfer? They're talking $84 trillion through 2045. And so while I said 5 years out, I think that this is the thing. This is the long game, guys. Like, hopefully we're not in this thing to become millionaires overnight. Like, here's the deal. Like, I hope you all do. But yeah, what we have to understand is like this, there's going to be some stuff happening. And so as we're going through, guys, like these are the things that we need to be preparing for because we know it's happening. We don't know when it's going to happen. We know it's going to happen either tomorrow or all the way up until 2045. And what are we doing to go through to make sure that we are that trusted person that is going to go through and help them with this? So I wanted to bring this up, guys, because as we're going through and we're just talking about real estate in general, I think a lot of times we were thinking that they were going to go through and they were going to sell their businesses, which absolutely that could happen. I think we were thinking that there was just going to be a bunch of money passed down. Absolutely could happen again, right? So these are the things as we're going through and we're dealing with it. We also have to think that they have real estate. And not only do they have real estate, but the real estate could stay in the family's hands or it could transfer out of the family's hands, or that real estate could stay in the family's hands, but there's another real estate that's going to be, sold off at that time. We're also seeing where the family members sell a house and the kids sell a house and they buy a bigger house. Guys, like we're seeing all this cool stuff happen right now because we are seeing the extended family, especially with, just prices going up, right? We live in an age where inflation is very real. And so we're actually seeing some very creative ways where maybe the families are wanting to stay together and they're figuring out like, okay, your house is too small, my house is too small. Maybe we actually don't still want to be under the same roof, but we want to be on the same piece of land. And so they're figuring out all these different things. And so what are we doing to position ourselves to win here? Which then brings me over to here, which, right, we're just living in this wealth transfer. It says the bank of mom and dad constrain retirement. All right, cool. It says parents of adult children are increasingly providing financial assistance. Still goes through to this $84 trillion. And what we're seeing is this the failure to launch trend started with millennials. Okay, cool. I'm a millennial, so I'm allowed to poke fun at this. And I think about avocado toast and living in the basement and all of these different things. And yet, here's the deal. Is some of this true? Yes. Is other this true? No, only in the sense to where life is just busy and chaotic and messy and like stuff happens. But check this out. It says, according to a 2024 study by the Bank of America, over half of adult Gen Zers reported that they don't pay for their own housing. What? And so I don't know how big this survey was. Like this could be 10 people. I'm not going to click on it and go do some research. Or this could have been a couple hundred people, or this could have been a couple thousand people. I don't know how many people raised their hand for this survey or where they were even found. But it said half of the people that they surveyed that were in the Generation Z, not the avocado toast eating millennials, and not the I'm going to live in my parents' basement while I go to college millennials. These are Gen Zers. These are the generation after millennials. And they're saying that half of them openly reported that their parents are actually paying for their housing. And then it says a separate study from savings.com found that parents of adult Gen Zers expect to give their children about $1,800 a month in 2025. Now, we think about Colorado, I don't know what $1,800 is going to get you. Maybe you're house hacking and you're living in a room. But with that, like that includes their expenses, right? There's their grocery bills, their cell phones, their rents, their utilities, like they're getting subsidized, right? Like as we're looking at this thing, like here's just the very real reality of what we're in. We have a generation, and I like to pick on millennials because I am one. I also like to pick on baby boomers because I think it's fun. And when we think about the baby boomer generation, like we have to keep in mind, this was one of the biggest populations, one of the biggest generations that came through, and they didn't like how things were happening. So they actually got into office. They changed tax codes to benefit themselves. And it's okay, boomers that are on this call, like I'm picking on you, but I'm not. Like you guys were smart. And they changed tax codes. And then as they were aging, to make sure that they were making money, then they got to this other age where they're like, oh my God, now we need to save our money and protect it. And they started changing tax codes to protect it. Like the baby boomer generation is super smart. And again, like I'm going to pick on them a little bit, but yet they did stuff right. And now what they're doing is because of what they have done, now they're reaping what they sow. and they're also going through and they're having to subsidize their children, is all this is really saying, which is kind of interesting. It says that we see that families spend an estimated average of $26,000 annually on kids through the age of 18 and roughly $468,000 over the lifetime. It says people in higher cost of living areas pay more. Expenses for families only continue, with Gen Zers and millennials both experiencing record high housing and post grad cost. Americans believe, and this is where it gets interesting, believe that they need 1.26 million dollars in order to retire comfortably, but just over half think somewhat or very likely of what they'll outlive their retirement savings, with only 40% of boomers and 56% of Gen Xers reporting to have a concern. So we're going through, guys, and here's the deal. When we're going through and we're looking at this thing, we understand that life is getting more expensive. I saw an article the other day that, some ex-employee of Google was saying that we actually have to fear AI here. Like Terminator was real, and that's a foreshadowing of what's coming. But as we're going through, the alternative is that life is just going to keep getting more expensive if AI doesn't come and Terminator doesn't happen. And so, what are we going through to make sure that we, as the real estate economists of choice for our people, are helping them with these life decisions? And are we going through and are we educating them? Do we understand what is happening, right? Boomers age 61 to 79 have an average 401k balance of 250K, an IRA balance of $257,000. And this is per Fidelity of Q4 of 2024. So this is the last year data, right? This is the last quarter of last year. These are actual real numbers. And it says Gen Xers have an average 401k of 192 and an IRA of 103. And again, because the baby boomer generation did it right. And so as we're looking at this thing, I don't think that you necessarily, depending on your age, demographic, and bracket that you're in, I don't think you need to go run out there and go find a bunch of baby boomers to befriend, unless that is your circle already. But what I think that you do need to do is you need to be making sure that you understand that your people in your ecosystem have families that they're going to be looking to take care of over the next couple of years. And there may be things coming in different directions, right, as we're looking through, including the kids. The parents are subsidizing the kids. So then we're just looking through this whole thing. What this looks like to me is that we have a baby boomer Gen X group. We also have a millennial group and we have a Gen Z group. And guess what? They all like to be communicated to differently. They all have different needs that are happening. And what are you doing to stay up on the latest trends to be making sure that you're communicating out to your people, for whoever hears your messaging can make sure that your messaging goes into their other ecosystems for you to win. Because I think this is interesting. We've just kind of gone through and we've looked at, we have this big wealth transfer that's happening and it's going to be in real estate, but there's also people that are getting subsidized by their families. Let's go through and let's look at some of the housing markets, right? And so we look at this thing. So 78 major housing markets where inventory has bounced back. Among the nation's 200 largest housing markets, and guess what? We're a part of those. These 78 metros now have active inventory above 2019 pre-pandemic levels. And you guys know that we're going to be there. So let's look at this thing. So we go through, here is Colorado Springs. We look at Colorado Springs back in 2017, 2,100. Fast forward to now, 3,700. Guys, that's inventory level. There's 3,700 listings in Colorado Springs right now. We go back into, here's our area when we're looking, Denver, Aurora, Centennial, 6,200 back in 2017. 13,000 homes. But here's the thing, guys. I think this is what gets interesting as we're looking at this thing. Home prices aren't dropping drastically, right? Like if we go back to real estate school and we start thinking about supply and demand, and we start going through and we start thinking, okay, there's so much supply that demand goes down, and then we start to see price go down. That's just not happening. And this is the reason why it's not happening. If people are going through, we have to understand that most people, recent study, and I don't have the statistics with me right now, but most people with a mortgage in the United States have at least $200,000 in equity in their home. And I could pull that stat from somewhere. I could probably go find it. I just don't have it readily available right now. And so when you start thinking about that, and you start thinking about the ability for these people, they don't need to sell their house. They're not in a cash poor position to where they're having to go through and they are in dire straits and they need to have a fire sale. That's why we're not seeing giant flash sales that are happening right now where they're trying to move their product like they're throwing it out on Craigslist and it needs to be gone today because the landlord's evicted me. Like that's not the situation that we're in. We're in a situation right now where people might need to sell, but they're not in a financial position to where if they don't, they're going to get hurt. And so what are we seeing? We're seeing people rent their homes and then just moving, right? We're also seeing people say, you know what, I wanted to move, but I don't need to move. So I'm going to hold on to this house and we're going to see what the market does. So we're actually going to see probably more homes go offline. And so that's where it's going to get strange, right? When we start seeing some houses actually go back off the market because they put it out there, it didn't work. The listing expired, and we're going to start seeing that pop up more and more. We're in July right now, guys. We have to think that, people are going to have listing contracts for what, 6 months to 12 months, most likely in that area. And so you guys are going to start to see houses go to expire stages. And what's going to be interesting is they're probably going to have the mindset that the real estate agent put the best photos up there. They did the best marketing they could. They had the open houses, and it's just not the right time. And I think that product's just going to fall offline, and they're just going to hold out. Which kind of brings us to this. And so let's kind of go look through it a little bit. So this is Logan Motoshami, the lead analyst for Housing Wire, and you know that we're bringing him out for the Rocky Mountain Summit here. And it says housing inventory decreased last week. And purchase application grew 25% year over year. What in the world is happening? Guys, like you guys are real estate agents in one of the most interesting real estate markets that we've had in recent history. And if you guys were on Coffee Talk the other day, I kind of talked about this a little bit, is that you guys are in a market where we would think of a normal market back as 2019, because again, some weird stuff has happened from 2020 to today, and it's all changed. That's what's interesting, because we can't say that, oh, we're still living in a market where this is going on, because you guys aren't. Like no 2 years have been similar from 2019 to today, back to back. And that's what makes this so interesting. And what's even more interesting as you're looking at this is the time of year where, historically speaking, we would have said that people are going to go back. They're putting the toys back in the shed. Like they're getting ready to go back to school. They're getting their last minute vacation out. Like they're doing all this stuff. And that's just not what we're seeing right now. What we're seeing is people are going out, they're getting these purchase applications gone through with the banks to figure out how much they qualify for. Then they're going back and they're getting up on Zillow and they're just hunting. They're looking. They're looking for that perfect house that checks all the boxes. Hey, I understand what the cost of money is. I'm not super excited about it, but I am going to make a move if the right house pops up. That is the mindset of your people right now. So let's look at this thing. It says, in the 2 weeks leading up to July 4th holiday weekend, our weekend housing tracker showed that the housing data was stabilizing as mortgage rates approached their lowest levels of the year. It says, however, with July 4th falling on a Friday, they noted that the 2 following weeks would likely disrupt the data. And that said, things to return to a normal week. And let's look at this thing. So your housing weekly inventory data, 30% more than last year. And you can see right here, there's your dip, like it did. We did see a little bit of a dip right there. But again, guys, we're approaching this thing, like we're getting back to this 2019 level. And here's the deal. We have to keep this in mind. When we're talking about how we're getting closer to 2019 levels, that's still not enough inventory. We have to understand, guys, that we have people that get married, they have babies, those babies get older, and they need to buy houses. And obviously, I'm not talking babies in the last couple of years, but this is just a cycle of life. So our population keeps growing. Also, I understand with all the things that are happening in the news, but we still have some of the less strict immigration policies out of any country. All right, let's be very real about that. Even though, regardless of what we're seeing in the news, yes, there's some stuff happening right now, but it's actually pretty easy to come into the United States anyway right now, right? Legally speaking, that's what this looks like. So our population keeps getting bigger and bigger and bigger and bigger every year. I mean, you guys want to go look at something, go look at Japan's rate declining population. They have some of the strictest immigration policies in the world, and their population is shrinking as people are not having babies and they're not naturally growing their population. They're not bringing in foreigners into their country. Like their population is getting small. Like they're going to be in a real issue here in the next couple of years because they're not going to have a workforce to drive anything. So here we go. We got 30% more inventory than last year. New listings data. We can kind of see this. Here we are. Like it tipped off. So, okay. So we've been seeing this decline. Cool. This is nothing new. Seasonal market. We're seeing people that are like, you know what? My priority is let's finish up these activities. Let's get the kids back in school. We're going to just kind of move forward. So this is nothing. Like this does not surprise us. So again, we have inventory. We saw a little bit of a dip. And we're seeing less homes come online. Okay. We're also seeing price cuts. Here we are, 40%. Here you guys are. Here we are, this big, dark red line, 40%, almost 41% of all properties are taking a price cut. And again, not new to us. Lots of listings. I want to sell my house. How do I make my house look good when there's other listings in the area? I got to make it cheaper. Makes sense. So 40% of all homes, we know historically speaking, 1/3 of all homes take a price cut within the year. So we're not too big of a difference. But here's the graphic that we all need to see. If you didn't hear anything from today outside of you can go buy a house for $1,000 in Florida, as long as you have $128,000 and $20,000 every year to go play golf. I don't know what a round cost after that, but your purchase mortgage application data is the moral of the story that we need to be running with today. Guys, look at this. We are well above the peak of 2024. And one of the things that we need to be doing is we need to be making sure that we are staying top of mind. Here's the deal, guys. I understand it. The market's weird. But this says there's about to be a lot of opportunity. There's about to be a lot of opportunity. And it is our job to be in emotional proximity to those people when they're looking to transact business. Guys, this is what this is telling me. Your people, while they don't like it, they understand that the interest rate is what the interest rate is. Now they're just waiting for the perfect home to come online, and they are going to move forward on it. What are we doing to stay in front of those people? Like, this is the name of the game right now. We understand that there's a lot of wealth that's being transferred around right now. We understand that interest rates are hovering around 7%. We understand that you guys are living in a time where home prices are as high as they have ever been. And yet, people are going out and they are talking to lenders. Like, this is what this data is showing us. People are talking to lenders more so than they have done over the last year, over the last 12 months, over the last 18 months. We are seeing more people go talk to lenders than they have in a very long time. And their conversation is they're trying to figure out what they qualify for. Now, here's the deal. You guys were on Coffee Talk the other day. You heard about Dale, and Dale was talking about how they're looking to pass some laws because what was happening is these people go and they figure out what they can qualify for, and all their information was being sold off. And so their information is being sold off to all these lenders. These lenders are calling, hey, I got a better rate. Hey, I got a better rate. Hey, I got a better rate. And here's the deal. Someone has a better rate, and then they say, do you have a real estate agent? I have a great partner. And one of the things that they could be doing is, oh, my partner in real estate, what they do is they rebate some of their commission back to you. So you want to use my person. Well, here's the deal. That doesn't work for you guys because if you're not that person, you're not getting the business. And so one of the things that we have to self-reflect on is any of those people that I was at the family barbecue with over the weekend for 4th of July, right, 2 weeks ago, are any of them looking to buy, sell, or invest in real estate that I didn't take enough mind share to be their real estate economist of choice? Are any of the people in my circle that I'm hanging out with continuously, are any of them thinking about buying, selling, investing in real estate? Is it 6 months from now? Is it 1 year from now? Because here's the deal. I would say this, guys, even if someone's told you that 1 year, a year and a half, well, here's what's happening. Are they just placing it out there because they actually think that there could be some changes in the mortgage rates? Are they saying that because they're thinking that there's going to be some changes in their employment? Or are they just saying that because that's the timeline that they threw out? And if the right house comes online tomorrow, they're going to jump. And that's what we need to be thinking about, guys. Like, what are the things that are going to be the motivational things that are going to be happening that are going to help people move forward in a transaction? And it's not going to be us, right? Like, we're not going to be able to talk to anybody to say, like, hey, you should go spend $600,000 on a home right now at 7% interest, right? It's going to be things that's going to be happening on in their world, and we just don't know what those things are. Our job is to be close to them when they're thinking about moving forward. Guys, if you're not taking anything from this call except for this visual should say, hey, despite my limiting beliefs and everything that the news is portraying out there, there's actually people going out to figure out what they qualify for. And they're going to be using a real estate agent to buy that house. And so if it's not me, who else is going to get that business? And what do I need to do to make sure it is me? Right, here's your pending data. It is going down a little bit only because here we are. It's seasonal. We're going in and we're not going to talk about the 10-year or the spreads, but here we go. Here's your jobless claims. Jobless claim data is going to be very important. This is one of the things that we're going to be looking for. The tariff thing is the boogeyman that's living under the bed right now. We do not know what tariffs are going to do. All we know is that stock traders and bond traders and all these other guys, they get spooked and they start moving the market when the president speaks, and weird stuff start happening. But this is one of the big things that's going to actually really be driving interest rates, at least for us, right? No longer inflation necessarily. This is actually going to be what it is. And so here we're going, guys. Like, we actually have a very, very healthy housing market because of what's happening with jobless claims, right? So our housing market is not in any real scramble up or down right now, only because people have jobs. Now, again, we have to keep in mind that while we're looking at this thing, we are disproportionately affected when we have a dollar amount on what it's going to do to the cost of money to be able to go borrow on one of the largest financial decisions that most Americans will make in their lifetime, right? When we think about this, no one bats an eye going onto Amazon and putting it on a credit card to get their free Prime delivery in 2 days, right? Because of something that they found and they were like, you know what, this looks cool. I want it on board. But where people do slow down and start to think is when you go out and buy a $600,000 home and they have to make a $4,000 a month payment every month on that home. And that's just where we're at. So when we look at jobless claims and we're looking at where they're kind of like they ebb and flow a little bit, but there's nothing crazy happening, the Fed's not going to move and drop rates. If this number were to spike, and we do not want it to spike because that is un-American, right? We do not want to see our fellow Americans lose their jobs. That puts too much financial heartache on so many people that get affected. But yet again, I want to be real with you guys, and I want you guys to understand this. If we go into a recession, your guys' phones are going to ring. And I say that, right? Like, your phone's not going to just ring. You have to be in a relationship. You've got to be doing the necessary activities. But if we do go into a recession, the people that were actually looking to buy a house are going to go buy a house because interest rates are going to drop, because the only way that the Fed is going to be able to stimulate the economy is to make money cheaper. And then what's going to happen is we're disproportionately affected when rates go up, and we're also disproportionately affected when rates go down, because that means more people raise their hand because the cost of money is so much lower on the largest transaction that most people make in their life. And so then their monthly payment goes down and more people will move forward. So what are we doing, right? We're already seeing that people are raising their hand with interest rates being at 7%. If this number goes the other way, which we don't want it to see, they're really going to be raising their hand. They're going to be moving forward. So they got a pair of housing data lines. They're always going to be key, right? Builders confidence data and housing starts. And so, guys, we live in Colorado and we see this thing slowing down. And we see this thing slowing down. It's not coming to a halt, but it's going to slow down because the builders don't want to be caught holding the bag, right? They're not the March of Dimes. They're a for-profit company. They have stockholders and shareholders that they have to report to. And so this number actually would start going up if we were to see these piecemeal guys start getting fired, right? The roofers start getting fired, the framers, like they don't have jobs, like this number would go up. And yet we're not going to see this number go drastically anyway because things are still happening. Like look in Ralston Road right now. right? We're seeing these developments that are happening, right? That's not housing starts necessarily. It's not definitely not new permits because they've already pulled the permits and they're just moving forward. But think about how we do things in Colorado. You go forward, you find a piece of dirt, you say, hey, I would like a house on this piece of dirt. And they say, awesome, give us money. We'll see you in 1 year's time. And then 12 months goes down and now there's a house built. Now I know I skipped a lot of things in between, but that's really what it looks like. We do not live in an environment today where you go into a new build community and you have 15 homes to go choose from that are already built, because that's not how things happen. They want to make sure that they keep prices at as high of an elevated level as they possibly can to make money. And that's just kind of where we're living. But let's talk about interest rates. So here we are, we've been talking about it. And guys, like, this is what we want to see. This is good stuff, right? Like, this is 1 month's worth of time. And while there's a little bit of ebb and flow and a little blips, nothing big, not huge blips, like, this is where we want to live. We live in the United States of America. This is not a third world country. And the reason why I say that is, like, when we were to look at this, guys, this is what spooks people. Like, we live in a place where we should be able to kind of figure out like what the cost of money is going to look like today, 6 months from now. And this is what scared a lot of people from buying and selling houses over the years, right? Over the year. If we were to look at 2 years, it gets even weirder. Look at this. Like, this is what scares people. Like, and it also says, well, hey, I need to wait for this to happen again. Look at this big drop. We want it to stay flat. A flat interest rate line helps you and it helps your client. It helps your client because now they understand kind of what the cost of money is going to look like in the future. Remember, homes are sitting longer. And we understand that most sellers become buyers. And so a seller does not want to dwarf their purchase power if when they sell their home gets under contract in 60, 90 days, they lock in their rate and their rate is a percent higher. So when we look at this, these are the things that we have to keep in mind. Like, this is what we want to see. This is good news. Flat interest rates. It helps people move forward because they're not scared that they're going to get outpriced.